Hi, Warriors. Yes, same to you, Alexander. Happy hump day. Nice camel. Paul Nash, how are you? Ingmar, how's it going, buddy? Blake, Steve, Bran, Hugo. Okay, so Euro's up, heading towards the number I talked about earlier in the week. 1650 to 17 is what I'm going to be looking for. And we may get that test of the breakout in the dollar. So here's the euro. I'm figuring up here, maybe stretch to 17. And at the same time, maybe we check this breakout here coming in at 97.40 now. And we also have some confluence with the, looks like the 200-day on the 4 hour. So that's an area. I shorted gold yesterday after they brought it back up in here. I think this could be significant, especially if we take out 340. Silver's still holding up better. Okay, silver, I still think is going to have trouble at 38. And we should be
Hey,
watching Kate.
I
We
was
should
just going
be,
to say good morning, Dale. And
good
did you
morning.
see Uber reported earnings today?
Oh, really? I got out yesterday.
Oh, you did? Oh, shit, it's down. I think it's down like 4 or 5% maybe. Last I looked anyway.
Oh, wow. Okay, let's see. No.
Oh, it was earlier. You can see the wick. It was down. It
Yeah,
was it
well,
was
I got out because we negated this head and shoulders breakdown. It looked like it was going to. And another lesson, okay? So Uber led the way down before we started correcting in the market, and then we had two big down days,
yeah.
right? The key reversal, and that was Uber here, and then good follow through, and it couldn't break. So, I stayed patient over the weekend. I gave back premium. But when we started doing this, I said, you know what? I'm going to get out of the way. And because, just like in Elliott, there's always a alternative um, count. There could be in Uber too, especially now that I guess the initial reaction I wouldn't have been able to do anything about. But so, this on a big time frame, and this is fractals in action, okay, on a big time frame. The reason I did it in the first place was it was a third drive. I did it here, okay, and made a little money and then gave some back. And then I did it again here. But you see this right here? Sometimes on the third drive, it can be a three. So it's a fractal of the bigger pattern. And
Yeah.
to me, it looks like that could happen. So I got out of the way. Um, and we'll see if I'll be happy about it. You know what the key? You know what the most important word is to me? It's really helped me a lot. Next.
Yeah.
Uh,
Next,
I
baby. Move
yeah,
on. Move
yeah,
on.
like I've been working with this real good trader who says I don't live in woulda, coulda, shoulda land.
That's
Okay,
right.
so
No
and
one lives
so
in we shouldn't live in shoulda, coulda, woulda land.
yeah, so why dwell
Yeah.
and say,
People
oh
beat
well,
themselves up all the
if I
time.
would have stayed, I da da da. You do the whole commiserate
Dale,
thing.
Dale, Dale, here it is. Why beat yourself up when we get beat up by the markets all day long anyway? So like
Yeah.
why the hell should we beat ourselves up, right?
Yeah, and look, I own it. I've been doing it. Don't do it because it'll shorten your career. You
There
really
you
need
go.
to get a handle on that. Okay, don't
Get
go
a grip,
fetal.
people.
Yeah, there you go. And in fact, maybe you just need to join the service and go through basic training somewhere so that you're not a baby. Anyway, who wants to give up being a baby? Give me a Y. Anyway, I'm a 70-year-old baby. Anyway, don't even imagine it. So let's go to K. So K, your preferred long,
Righty
uh,
high.
which it, which has been euro. is still, the strength on the board, although Aussie is kicking in a little bit here.
Yeah.
You doing anything with Euro or Aussie here? Are you playing alongside?
I'm long Aussie since yesterday, and today I just tried to accompany this move in the euro, but keeping it all to smalls because nothing is really overly exciting. And the problem as well with the Aussie is that apparently on Friday we have like a very big expiry, right at 65 the figure. That was something I
Yeah,
didn't want to hear.
yeah. So
But
they'll pin it there so both the calls and
well, it
puts
could be a
fry.
magnet if we don't get any other
Yeah,
real news, right? Then yeah, the euro, but it's all, I think if once we get closer to 116 and a half in euro, if my assumption or hunch is right, is that we are rather building ranges right now, from 116, 40, 50 or so, if we see it in the euro, which
yeah,
is possible because I got the impression that the market is trying to front run a little bit the announcement of Trump's nominee to replace Kugler, as he said yesterday. And then we have like this trade stuff as well, seventh and eighth. Maybe the market is front running the events a little bit, but I also fail to see a real reason why we should all of a sudden buy euros back up to 118, for instance. So
yeah.
I'm going to be very reasonable in my expectations right now, and yeah, I think 116, 40, 50 is already good enough for me on this round. And Aussie, you need to get through that 65, 35, 50 again. Otherwise, it's just going to continue to range.
And Cable looks
That,
like it wants
yeah,
to check this neckline, Blake. Might be a
Yeah,
play up there.
yeah.
Could be a play.
I think that neckline's a pretty big level, and I think you can play against it up until the
Yeah.
Bank of England tomorrow.
Okay. Maybe yeah. Maybe you
But
wait till after
Ryan's
BOE.
always got views on the Bank of England because he's a
Oh,
big, huge fan, huge fan.
well, hold on a
All
second.
right, all right.
First of all, I have to ask Ryan. I checked to see who was here at 5 o'clock. Okay, so I know who I have to talk to. So I want to know if you brought a note from your mother
Yeah,
to explain your tardiness today.
yeah.
What
My system decided to log me out of Zoom, so I went to pop into the room, and it's like, oh, password,
all
username,
right, all right,
verification. Thanks
all
a lot.
right. Well, better late than never. So
I will
If you're not early, you're late, Ryan.
yeah, that's when I'm
I'm
on
never late.
time, I feel late.
I'm always the exact time I need to be.
At least that's in your own head, buddy. Yeah, all right.
Oh, you're always punctual with yourself. Anyway, so what do you think, man? BOE tomorrow.
What's my view on the BOE? A bunch of clowns. That view doesn't change. So, yeah, it's a difficult situation for the BOE. They got high inflation and they got weakening jobs, crappy looking economy, a rubbish chancellor.
That's called stagflation, right? I mean, you can call a spade, right?
Called stinkflation from where I'm sitting.
Okay.
But yeah, do they turn dovish? A cut is likely. The market's expecting a cut. The vote could be important. I think if they cut, it's going to be a big vote cut because I think they'll all say, yeah, we could do with a 25. They could have done one 2 months ago and it wouldn't have made much difference. So I think a vote today or tomorrow is potentially going to be a big vote, which the market might infer means they're going to get on a little cut phase. But I'm not sure that'll be the case because whoever votes, any of the hawks that votes for cuts tomorrow will probably go back on the sidelines the next meeting. But yeah, really how they spin what's going on with the UK economy is going to be important. I don't think any rallies in the pound will last. But cable's a different beast altogether.
Okay, so then you're still constructive euro pound because it
Yeah,
looks
I'm
like
still long. I'm
yeah,
having one of those days where I don't want to. I've been right in my analysis, but don't want to be. I said we might struggle today up at this 87, 15, 20 area, which
yeah.
we are. I'm long, so I'd like it to go through. But yeah, we're probably going to tread water a bit ahead of the Bank of England.
Okay. All right. K-Man, you have comments on yen and it held this moving average. Do you think it's done? Um, where's everyone's head on yields? 10-year
Uh,
didn't quite get to
I
objectives,
think
but
we're.
go ahead.
Well, Ryan was also talking about it, like that it's on the yield train, but then you look at the crosses, and they are still beat. So I'm still having trouble to be long yen, the currency, for
Yeah,
longer.
yeah.
Just because of those crosses, and they are not like inspiring me too much confidence in the yen as such. We had a bit of those wage numbers, then the nominal wage okay, real wages not okay. And, yeah, I think we're still in the same boat as we were. You will have reactions on dollar side, but then look at dollar yen being extremely stable, where the rest of the dollars is rather a bit on the defensive, right? Um, yeah, I'm don't have an awful lot of confidence in the yen right now. Things could change, but yeah, and BOJ themselves, they told us to to also watch the wages, and the results that we had was not really brilliant, or at least not pushing them towards another cut or becoming overly hawkish.
How about gold being down 18 with a weaker dollar?
I'm sorry.
How about gold being down 18 with a weaker dollar?
Yeah, we had this thing again, and I was watching it last week. We had the same thing. Monday, Tuesday, U.S. buying gold, but Asia is not participating, and that's why I went out of most of what I have again this morning, because I just want to see what U.S. wants to do with it. But if they buy it again today, it's probably a program ongoing, but it doesn't have the looks of being as supported as it was the two prior days at your when the US walks in. So I think we could go back to what I was saying this morning, 45, 55, and then anything deeper we'll probably see a bit more reaction, and then we can get back to 33, 10.25 or so. That's all within the possibilities.
So is
I've noticed.
breaking down under this trend line. That's
Oh,
within
if
the
it goes, I
round.
think 32.45. 32.45 is my magic number. If it goes below there, there's more coming.
Yeah. Okay.
Yeah,
Well,
that's really my level.
yeah. So I mean, we could have something like this from here would take it underneath it.
We could, we
And
absolutely could,
if you
because
take the,
yesterday
go ahead.
and this morning we are not pushing through, as you say, despite well, lower dollar is also a big word, but yeah, at least
Yeah.
euro dollar is pushing through and gold is not following. So that may mean that we have more correction to come. Yeah,
Okay.
I'm not correction averse. Um, I think it's going to hold low 33s for now, because there's still enough in softness maybe in the data. Bonds are not really coming down much, or yields are not rallying too much. But we know gold can go on its own, and silver is doing much better, much better.
So this is a $200 range here. So that's the size of the formation. And a breakdown here is a 3270. That gives you 3070. And
Mm.
I know most people aren't looking that deep, but you know what would be great for a gold buy would be it to take out the 50-week moving average, which is around 3,000, and panic people. And I think it must have been the daily that was at 3,000, because this is actually a level I've had for a while. I thought 2920,
Mm.
but the daily, and you know, I don't know what DSI is, but I really don't hear anyone talking about even a correction at gold. So here it is. Here's the 200-day. It's way down here.
Yeah.
I mean, so
Mm.
if we had a little panic under 3,000, a big round number, that would set the stage. And if I'm right about the dollar, and this is a break to buy, and we're going to 102 or so, I think the tourists will panic out of gold under 3,000.
Yeah. Oh, very possible. You know what the trigger may be is a trade deal with China.
Okay, that would be bearish
That's
gold.
one of the if you look outside of pure technicals, a
Hmm.
trade deal with China is probably going to see gold come off a lot.
How about a peace deal with Putin?
Yeah, but
It
then
doesn't look
a
likely.
peace deal with Putin, yeah, there's talks that he or Ukraine wants to make an what is it, an air pause, not sending
Oh, ceasefire.
more drones around, but then no later than this morning, they send another round of drones over some petroleum fields in or whatever it is in Ukraine. So much for a truce.
Yeah, yeah. Okay. Uh, Blake, you want to take over the charts and
Yeah,
fill us
buddy.
in?
Yeah, but before I do that, I just want to mention that, I was chatting in the chat box, or to the show about the risk management
Oh
webinar
yeah,
tomorrow. It's
yeah.
it's going to be a big one, guys. I can't accentuate enough how important this is. And remember, you can go right to our website and just click right in the middle to it's in yellow. You can see it right if you go to forexanalytix.com, right there, right in the middle. It says something big is coming. Just click there. That gets you to our newsletter. Yesterday we sent out a separate email. We usually just send out emails for the weekly newsletter. If you guys don't know what the weekly newsletter is, let me just show you really fast so you guys understand what you're getting in for here. Let
It's a
me
great letter too. I mean, it has a calendar of last week's events and this upcoming week's events, so you could,
y- y-
check off what you want to pay attention to.
Yeah, I mean, this is the newsletter, right? So it tells you, this is what happened this last week, a trader funding program, especially if there's any sales, which by the way, there is going to be a sale coming up at the end of the month. This is how you sign up for the risk management webinar. Then we give you an update on all the different currencies, and then you keep scrolling down, you can get, update on, the DAX, what events are happening for the week ahead. Here's the big, news events that are coming. It's a newsletter every week that you can read. But
Great.
we also will update you on, what's happening with trading analytics and the features that we're adding there. We're slowly but surely, kind of leaking it all out. But that is where you're going to get your link to register for the risk management webinar. Now, we sent out a separate email yesterday to make sure that, hey, here's the link to register. You'll get another email tomorrow. So if you do register for that and you get a duplicate email tomorrow, it's just because we want to make sure everybody is registered. Now, I was just having a conversation in our chat about if you're not going to be there and you can't be there live, still register, because we're going to send out a link to all of you who have registered. You'll have a link to a private recording. It's not going to be public. This will never be public, just so you guys know. This risk management show that's happening tomorrow will never be publicly viewable. It will only be viewable to you guys, okay, that are signed up for that. So that's it. And you'll get a link and you can go access that at any time. I'm going to tell you from experience, this is, the first time I sat foot and started my career on a trade desk, was later than, like, Dale or K-Man, and probably around the same time as Ryan, is in 1995 or 96, excuse me, November 96 is when I sat foot onto a block trading floor in Scottsdale, Arizona, and I haven't looked back since. I've been trading aggressively daily since that one day. And I'll tell you what I've learned over the last, 29 years. And I got my Series 7, the year before that, but that didn't really matter. It didn't really count. I don't say. As a trader, though, the things I've learned, especially a few years ago, about 10 years ago when I started trading for Gelos when you have unlimited buying power, you tend to learn risk management skills real quick. And when you have unlimited buying power and unlimited P&L, um, uh, 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 you know, ups and downs. But some of those things that I learned, especially over the last 10 years from some of the best traders literally in the markets, have taken me to like the next level over this last 10 years. So I want to be able to illustrate that because what I've found is trading, or excuse me, a meeting with all of these new traders over the course of the last year and a half, 2 years with the trader funding program. I meet with every new trader that comes in, or at least I try to. Only reason why I don't is just because they don't respond back to me. But those are the very few. But when I meet with new traders, what I find fleeting for most newer traders is risk management skills, even some of the veteran ones. So I think it's going to be very important to understand how to have longevity in the markets. If you really want to be in this business for a long time, you have to be at tomorrow's webinar. So you're going to get the combined knowledge of our entire team, almost our entire team. Couple folks are on holidays and aren't going to be able to be there, but make sure you're there. And like I said, if you can't be there live, just be there for the recording at least. I do want to talk about one specific subject matter. If you guys all should know, especially if you're on the week ahead video or you watch the week ahead video or the trade-off show or whatever, you guys know I'm really, really preying on this, as predatorial wise. I'm preying on the Euro Swiss, and you can see I just peeled off. I was extremely large for me, and I just peeled off a third of my position just now. One of the things, if you're in the news and research room, then you knew that which you have access to all these rooms. Yesterday, the Swiss president, she flew into the United States last night to try to sway President Trump from these 39%, tariffs that Switzerland's going to get. It's mostly, pharmaceuticals. And you heard Trump yesterday talking about pharmaceuticals and luxury goods. They're really going to crush the Swiss economy if they don't get this uneffed. Let's just call it that. She doesn't even have a meeting with Trump scheduled yet. Now, K-Man and I were just talking in the chat room about how important this is. That if she only meets with little Marco Rubio, I can't believe I just called him little Marco. If she only gets
see
a
how
meeting,
it sticks.
It sticks, right? It sticks.
When you
yeah,
say it, when you hear something over and over again.
I keep saying Pocahontas. I can't even help it. Just kidding. But if she doesn't get a meeting with Trump, which I'm assuming she's going to, it'd be crazy if she flew all the way to the United States with her economic minister and then couldn't get a meeting with Trump. I mean, the Swiss franc, I was just telling, K-Man, the Swiss franc is going to be, the Euro Swiss is going to be trading at 94 cents really fast. We're going to trade right up to resistance if she can't secure a meeting with him. I doubt that's going to be the case. When you have a head of state, a president of a country, sitting there wanting to meet with you, I'm sure he's going to find time. But I don't know. The United States. I say the United States. He, being the president of the United States, is in the power position right now, and he knows it. And if he chooses not to meet with her, that's just a power play. And it would be part of his tactics to string her along, you know, just push her back and for another month and send her home without even meeting with him. And, you know, Marco Rubio goes, yeah, I hear what you're saying. Thanks for coming. You know, we'll see you later. I mean, if I was Trump and I was trying to do what he's trying to do, I would choose not to meet with her and push her off. I mean, I'm just saying to negotiate. If that's how he feels, that's probably that is something that he could possibly do. And I'm not saying he's going to do that. I'm just saying it is entirely possible. And so you got to watch the Swiss franc really carefully. We are in near breakout territory. We're probing the 618. We're probing levels we haven't seen since since June, right? Right now. And there's a good chance we could, you know, make a move back to 94 cents. So keep your eye on the Swiss franc. I already took off some of my position this morning because I was too aggressive for me. But that doesn't mean I won't add back either. You know, if she doesn't meet with Trump and she flies home, you know, tail tucked between her legs, I will sell more Swiss francs. So just kind of giving you guys a heads up. I always pride myself, and I know the rest of our team does here too. We don't give you weatherman analysis. We don't give you. We don't say, hey, oh, I can't believe you didn't trade that. You know, you're so, how come you missed that one? No, we tell you what we're going to do before we do it. Yeah. That's the one thing I do on every Morning Edge show for the last 20 years that I've done the Morning Edge, is I explained it, and those are a private show for Forex Analytics subscribers. I tell people what I'm going to do ahead of time, and then afterwards we deal with you know, how did the market react? You know, did that work out? Sometimes it does, sometimes it doesn't. That's why I do that on the week ahead videos. I give you what I'm going to do, then I do it, and then we talk about it. That's the way it should be. It's not the other way around. Like, oh, I can't believe you weren't long this. You know, how, you know, didn't you see the breakout? Didn't you see that we made higher lows? No, we talked about all that last week. So anyway, I'm updating you guys because I know a lot of you do listen to the week ahead video. You've heard my whole spiel for the last couple of weeks. So now I'm just updating you on how I'm actually trading it. But if you want to see that on a daily basis, you come right into the trades room. You can see how I manage positions. You can see how K-Man manages positions. Ryan, so many great traders in our chat room, not just our analysts that are talking about what they're doing every day on a daily basis. So anyway, I'm done with that. I wanted to explain that and also let you know that this is kind of a slow news day. Tomorrow we have Bank of England, Banxico. Everybody's waiting for CPI next week. We are in summer markets. Something that I want to make sure that I illustrate, because I have done this to our traders that are in our community for the last couple of days. This is target trading environment. That means you find your levels that you want to be involved in. You trade those levels. You don't have FOMO. You don't chase the market one direction or the other. You wait for the levels to trade. Like, for example, the euro is pushing resistance that we talked about yesterday. It's pushing up against there right now. If you want to be on the short side of the euro, this is the place to do it with manageable risk. Not being short yesterday, being short today, right here. I personally am waiting for a little bit higher to get to the 618 at 116.35, 116.36. Then I'm going to start shorting the euro. I'm not shorting it now. I'm shorting it there. That's where I want to get short. Find your levels that you want to be involved in that provide you the best risk versus reward, or the best risk management scenario, and trade those levels. It's so important during this next couple of weeks, because
and Blake stole all of that from what we said on the Flow Show this morning.
I did.
Literally,
yeah,
word for word.
But you stole it from me, what I've been talking about on the Morning Edge every day for the last couple of days. So there.
But no,
but that's proper risk management. It's shit that people need to be telling you, and you need to be doing. And if you're not doing it, then you're in the wrong place.
Yeah.
Period.
And you know what, Blake, I just want to throw something in about risk management. So,
Sure.
everyone knows I've talked to Jack Schwager many times. Okay. And when we talk about the Wizards, I always ask him, did the Wizards have a hard time at first? And many did. And the one theme that kept coming through, and many of them have sworn to it after blowing up an account, the biggest mistake was not having a hard stop in. Okay, and these are guys that turned out to be written about in Market Wizards books. So their biggest mistake was not using stops. So if you want to be a wizard, and I know a lot of guys that are real close to the market have the discipline, they have mental stops, and they're just getting in and out. Most of us don't.
Yeah.
In fact, most out there put in stops with a CIC at the end of it, which means cancel if close. Oh, I don't want to get stopped out. What if it hits my stop and then goes my way? If you're going through that type of mental exercise, you need to know how to place a stop so that you have confidence that you do want to be out if that level's hit. And
The Dale, having a hard stop is so important for especially for yourself if you're trading for yourself or if you're trading for somebody else.
yeah,
It's about account preservation. I may keep mine fairly far away from the market, but the Swiss National Bank moving. If you were, when they removed the floor back in what was that
yeah,
2000, Brian, was
yeah,
it 2011 or whatever it
yeah.
was?
No one
15.
had stops.
15 shit. When that happened, I mean, by the time I got stopped out, I mean, it still protected my account. I mean, what was a $500 gain to a $15,000 loss could have been probably about $25,000 loss. So, even though it
Yeah,
slipped past my stop, but still it's about
the
preserving
fail safe.
your account, right? And anyway, we're going to talk about that so much during the risk management webinar tomorrow. I know you have Carly Garner.
Yeah,
She should be here. Um,
Carly's
uh,
great.
Let me make sure that you are co-host, so this way you can.
Not yet.
Okay, that's. Is she not here yet?
Yeah, she's there.
Oh, she is. Okay, here. Let me adjust that, Dale. So there you go. My bad. Was my fault. What a couple things before we go today. The Galaxy Note, which is somebody that just didn't put in a name, who's listening via mobile, says, the United States has to be really careful about, look, I agree with you 100%. I don't think just because I said something about how if I was Trump, this is how I would do it. I I don't want to politicize our show. I don't agree with everything that is happening, but I was just saying from if I was him and I was trying to do what he's trying to do, doesn't mean I agree with it. It's just, that's like if you want to play hardball, that's how you're going to play hardball. I'm just saying that yeah, I do have sympathy, a lot of sympathy actually for all of our friends and trading partners. But I also see the other side of it too. So I don't, like I said, I don't want to make it political by any stretch of the means. I was just trying to say if I was Donald Trump and I was trying to do what he was going to do, I would send her home. That's just what I'm saying. Because I get what he's trying to do. I'm not agreeing with it or disagreeing with it. I'm just saying that if you get what I'm saying.
Winning
Anyway,
Through Intimidation, Robert Ringer. It's one of the first books I read when I was young, coming out of college. And boy,
yeah.
did that screw me up for decades.
Well, no wonder you are who you are. Hey, listen,
Yeah,
guys.
I'm
One
still
one thing.
trying to. I've spent 10 grand on psychotherapists to get over that book.
Look, I'm gonna pass you. I'm gonna pass Dale over to so he can interview Carly, who's here. So I don't want to take up any more time. I do want to mention though. Don't forget our summer sale. You basically lock in your price at levels that we haven't had since 2019. So you get a 40% off of our month to month. And as long as you continue to stay a subscriber, your prices are locked in. So take advantage of that summer sale that we have. K-Man, Ryan, you guys' flow show is invaluable. I didn't hear that part of the flow show this morning. I listen for the first half an hour to hear all the events and why things are happening, and then I have to go off and do other things. But if you guys aren't listening to the flow show either live or as a recording, which I do when I get up in the morning at 3:45 a.m., I try to get caught up really quick. That's how I get caught up, is listening to these guys. So have a great interview. Ryan K-Man, thanks. And remember, get signed up today so you can be on the risk management show for tomorrow, which will be at 11 a.m. Eastern. Wherever you're at, that is the time that it's going to be live. All right.
All right.
Thanks, everyone.
Thanks, Blake. Thanks, K-Man. Thanks, Ryan.
Cheers, guys.
Thank you, guys. Great input
Thank
today.
you.
See you, K-Man. All right. Carly Garner was hot last time she was here. She liked bonds. She was starting to like the dollar. She's bearish gold. She's looking at a potential high in the S&P. So, Carly, it's great to have you back.
Thank you, Dale.
I'm in the same camp with you, and you started liking bonds before anybody. Wasn't that far off the low after the Moody's downgrade.
Yeah. Well, to be fair, I've been trying to get bonds to go the other way for a very long time. But yeah, they finally starting to come to life here. We're up against a little bit of resistance on here. I'll just pull up a chart really quick here. This is a monthly chart of the 10-year note futures.
Okay.
Won't spend too much time here, but you can see we're just right up against a trend line. And it's interesting to see as many headlines as the bond market's gotten in the last few months, handful of months. We really are going nowhere.
Yeah, it
So,
really is.
Yeah, so this
We
is the
should have
big
done
picture.
strangles or
Right.
volatility spreads
Right,
because it is
exactly.
compressing.
Yeah.
You were coming to like the apex of this.
Yeah, it's kind of do or die here. We like for our spec accounts and for our clients, we got out of our long futures on Friday after the jobs report.
Yeah.
For my personal account, my personal investment portfolio is very heavily weighted treasuries, probably obscenely so. But for specs, we're kind of sitting on the sidelines waiting to see what happens. I do think at some point it breaks out, but it's been doing this for a few years and hasn't done it yet.
Okay. So I caught you on an interview with I forgot her name. She used to have her own show. Now she's with a broker, ITM. Danielle.
Oh, Danielle. Yeah.
And I say we're on the same side of the dollar, but where are we
Yes.
going here? This is
Well, this is
S&P.
copper, actually. This is copper.
Oh,
Yeah.
okay.
And so, and we were bearish copper. Like, you can see there's a trend line here. Obviously, this is a weekly chart. This goes back to 2021. We've held this line every single time. We went short copper with options right around here. I'm going to show you the trade that we did. And the reason I'm bringing this up is it's just kind of interesting because of the whole Trump situation. So we went short copper here. Hopefully this works the way I want it to.
Is that the biggest one-day move in copper in history?
It was. So we got in, and honestly, when we first got in, this is the newsletter that we sent to our clients, just so you know what I'm looking at. It's the same chart, just a different place. We got in and it held this area, and we were up like on the spread. This is what we did. Just I'm kind of getting ahead of myself. We sold a $6 call for December, and we used that money, what we collected, to buy a put spread of 475, 425 put spread. And I'm just kind of showing people how things can go wrong and still actually not be so bad. We got into this trade. Everything was working as usual. The reason we were mostly the reason we were bearish copper, just chart here alone, but also the fact that, as you mentioned, we've been bullish the dollar, and if the dollar goes up, it's going to be really difficult for the metals to go up with it. In fact, they probably won't. The odds of them doing that are very slim. Copper and the dollar have had a negative correlation, pretty strong negative correlation. So we were playing the downside in copper as a kind of a proxy to play the upside in the dollar. We got in, looked okay. I think we were up one morning, we were up $1,200 on the spread, which is fine. We were hoping for more, so we didn't touch it. And I'm not kidding you, 20 seconds later, we were down 12 grand. So because Trump announced the 50% copper tariff.
We were up 17% that day,
Yeah,
right?
we were.
And then down
Yeah,
20% in a day.
right. So we wrote it the biggest, it went against us, the biggest rally ever in the history of copper. And then also, luckily, we were able to stay the course. We did overhedge, but in this business, if you don't hedge, if you just put your head in the sand and forget things are happening, you're going to
Yeah.
end up blowing up your account. So we
Yeah.
hedged, and the hedges got in our way. What we did is when the market rallied, we bought back our short put, took a profit there, but it was kind of a broken market because of the volatility. As the market was going up, the puts lost. The puts actually gained value. So we bought them back at a small profit, but what it left us was a short call, a long put with open-ended downside. But then our
Risk, yeah.
hedges were, our hedges were we bought micro futures to hedge, which those are what ended up being the loser. But the nice thing is it was such a big sell-off that the long 475 puts paid off pretty nicely. So in the end, it ended up being a wash. But to be fair, we went through the biggest one day rally and sell off, and we washed, and so we considered it a win. But we're actually
You know how to pick them, Carly.
I know, don't we? But we're actually if you are interested in trading copper, we'd like to actually play the upside probably from here, even though we're bullish the dollar. This trend line dates back to 2019.
Yeah.
So I just wanted to show that just because that's something people have been asking me about.
Yeah. So were you taking your blood pressure during the
Well,
24-hour period?
the nice thing is when you hedge, honestly, I didn't, there was zero stress. It was just kind of like, holy cow, look what's going on, hedge it.
Yeah.
And then, holy cow, shouldn't have hedged. But
Yeah.
the thing is when you manage risk, and it's not always easy to do because there's that mental game, and then there's also the timing of it. Things happen so fast. Sometimes it's
That was
so
blink of
fast
an
you can't
eye.
hedge. Yeah.
Yeah.
So it was pretty wild, but honestly, I slept pretty well at night just because we did all the right things. It just happened to not necessarily, we didn't make money, but I think I would venture to say there's probably people out there that did far worse than that
I'd
on that
say
particular
people on,
move.
I say they cleared. I
Yeah,
think they killed they killed the shorts, and then
I
they
know.
killed the longs.
They really
So
did. That was rough.
they cleaned the clock out of everyone. I would say, who's long or short right now.
Right. Yeah, that was a rough move. So unless you have another idea, I'll go to crude oil.
Okay.
Okay, so this is a weekly crude oil chart, and I've talked about this on the show. Crude oil is basically in a bear market since topping out in 2022. We've had temporary rallies, and some of them are very sharp rallies, but they've always kind of been sold into and failed.
Yeah.
This latest rally obviously were bombs
Yeah.
dropping in Iran,
Yeah.
all these sorts of
Right.
things, but not a single barrel of oil was taken off the market. In fact, OPEC has added oil. The Russian sanctions are tight, well, supposedly being tightened, but they don't seem to be pulling any oil off the market, really, just slowing things down maybe a little bit. So I think we're in danger of breaking below 65, and 65 is important. Anytime the market's been below 65, oil has had a really tough time keeping its feet under it. You can see in 2020, we saw this big sell-off here. That's pretty dramatic. It's not always that dramatic, but below 65 for any length of time has resulted in washouts in crude oil into the 20s or 30s, or in this
Yeah.
situation in 2020, even lower. So be on the lookout for that. And I think it's most likely going to happen. So we're looking for crude oil to get down into the 46 area. There's a trend line here that comes together. Some people ask me why the heck I would draw this chart, but I'm sorry, this line here in the middle. I call it a speed line. I don't know what the
Yeah.
name is.
That's
I'm
what
just inventing the name.
all
But
right. No, you're not, because I
okay,
use speed lines.
perfect. Okay.
I
So
invented it.
maybe I got it from you. I'm not sure, but you can obviously see
I didn't invent it.
there's a definite area where the market reacts to this line. So,
Yeah. Yeah.
some, drawing lines on charts seems very elementary and it shouldn't work, but for some
They
reason,
do.
it does. It works. So
And doesn't it still amaze you, even though you've seen it
it
work
does.
many times? Still amazes
Yeah,
me.
I know it's wild.
Yeah.
So that's crude oil. Any other
Okay.
market you want to take a look at?
Well, let's see what you're looking for in the dollar.
Okay,
Because
let's do it.
we had a breakout, and I'm
Mhm.
waiting for a little pullback to the breakout.
Mhm.
You know, 97.50,
Mhm.
97.70, something like that. But
Right.
let's see what you have here.
Well,
Uh,
you're probably right. So I've been talking about this for a while. I think we're repeating Trump 1.0 in the dollar. We've literally, it's gone a little faster this time around, but the pattern's been identical to what we saw during Trump 1.0. There's this trend line here on the upper side that my cursor's running along.
yeah,
We Trump 1.0, we broke above it, and then we failed and dropped 15 points. This time around, we broke above it, we failed and dropped 15 points. I mean, it's actually just kind of odd, but again,
yeah, it's
history repeats
interesting.
itself sometime.
Yeah, it's rhyming.
Um, and the last time around, you are right. It rallied and then it kind of pulled back, didn't quite retest lows, and then it started taking off and we had a nice recovery back to this line here. And I think that's exactly what's going to happen. So we are kind of, we might pull back a little more here, but I think ultimately we're headed for about 110, 108, 110, which would be, that's kind of a game changer in a lot of markets. That's going to put some pressure on metals.
Yeah.
Um, Believe it or not, I think it actually pulls the grains higher, like corn, soybeans, wheat, in a normal
Why?
relationship. Okay.
Yeah.
In a normal relationship, those markets are negatively correlated. As the dollar
Right.
goes down, grains go up, vice versa.
Right.
That's how it's almost always been. But recently, they've actually been trading together. The correlation's quite high off the top of my head. I think the last time I checked the 90-day correlation, it was in the 70s or 80s. So it was very high. And the purpose or the reason for that is tariff concerns. So the grains have been kind of selling off on the idea that China's not going to buy our grains because of tariffs and the trade war and all this kind of stuff. And that's also what was bringing the dollar down was the tariff situation. So I think that's why they were able to trade together. And as we work through all this and kind of normalize, if there is such a thing in this environment, I think the dollar rallies and it actually brings corn, soybeans, wheat with it. Um, so I don't
Okay.
know if we have
That's interesting. I've
any
been
grain
trying.
traders here.
Yeah, I've been looking at corn for a while. It's been diverging. What do you have up here? Is this
Yeah,
corn or
okay.
wheat?
Yeah,
All
it
right.
is.
Yeah.
That was the September. I'm gonna pull up the December. So the front month, which is based on the current crop season, I think it probably heads maybe even 20, 30 cents lower. So I think it's a little bit dire there. But
Okay.
when I'm looking at new crop, I think we've got a bumper crop this year and at some point that's all going to be priced in and I think we're getting pretty quick here. We actually went long corn futures here and you can see it broke down on
Yeah.
below the trend line, but we're not panicked. We bought a $4 put. Our risk is limited. I don't remember the exact math, but I think the most we could ever lose no matter what happens it was somewhere around $900 or something.
So the way I
Mhm.
would trade it is I'd wait for it
Mhm.
to get back above the line, above the
Right.
throw over.
And I can definitely appreciate that. I would say ours is just a different, this is just, it was such an opportunity to buy the $4 put only cost us 9 cents. That's $450. So
Yeah.
at that price point, we were like, hey, we can get in now. And if it holds, great. If it doesn't, no big deal. Our risk is limited and low, and we just ride it out. So we'll just hang tight with the $4 put. And like I said, even if corn goes to zero, we're only out $1,000 roughly. I think it's a little less than that, but um, corn's the
Do
kind
the
of market
bean?
when it turns fast. So it's hard to
Yeah.
chase it sometimes.
Yeah. Do beans
Yeah.
look better technically?
Um, I'll show you. I'm going to show you a monthly chart of beans here. I don't
Yeah.
trade
Look at it.
beans as much because it's more expensive to buy the insurance, but beans that are kind of in the same situation. This is a monthly chart, so it's a very,
Yeah.
big picture kind of idea. But beans are along a trend line here.
Yeah.
So I wouldn't, it's probably too late to go short beans if that's what people are thinking of doing, but I think, looking for a buy is probably a good idea. The seasonality in grains is really kind of sketchy. Normally they bottom out in late September or October that during the harvest lows, but that's been creeping earlier. In the last 5-6 years, we've started to see the seasonal low occur a little earlier. So again, that's why we're doing that. What we're doing with corn is we'd rather just, as opposed to miss it to try to save a couple $100 in risk, we'd rather be in when it happens, and if it, and go from
Okay.
there.
All right. Let's really piss people off and talk about gold.
Oh yeah, people get really upset about
They
gold.
really,
Okay.
they yell at me
They
all
really
the
do.
time. Every time I take a short in gold,
Yeah,
they
we've,
say, this guy's crummy. He
I know.
doesn't
Yeah,
know
I
what
get
he's
it too.
talking about. Anyway, okay, go ahead.
We're in the same boat. We've been, every rally we've been selling into using options, not futures. We're selling calls and then buying put spreads, and it's worked pretty nicely the last couple of
Huh.
months. I mean, it's I'll show you.
That's interesting. Your
This is the
3,000
weekly
number.
chart.
Yeah, your 3,000 number that you have up there. That's the 200-day.
Yes, I'll go.
Comes in at 3,000.
Yeah, that sounds about right. I'm gonna go back to that real in a second. This is a weekly chart just to kind of show you why we're selling. It's respected this trend line very well, and so every time it's gotten up there, we've put some sort of spread on. This is one we've already exited, and it's kind of sloppy. I should have straightened it out, but we sold a gold 4,000 call and then used the money to buy a 32.50, 31.50 put spread. That put spread takes a decent sized move to make some money. That's not, but the gold call, I think we sold, again, I'm kind of going off the top of my head. I think it was close to 2 grand. So it lost value very quickly when the market retreated. So that that's kind of been the primary moneymaker on these, because every time gold rallies to this line here, this blue line, the call options get very expensive, and they're, and so it's a has been, maybe one day it won't be, but has been a really great time to sell those. So let me go back to the monthly chart. This is why we're selling alt rallies, is because we're working off of this basic premise. Okay, I see what you're looking at. Yeah, the 3,000. It also happens to be kind of this trend line here, and if we break below 3,000, I think it's one of those trapdoor situations where it just gets really precipitous. And I still believe, I've said this many times, I still believe we're repeating 2011. You can see 2011, we had these 3 big waves. Now, the waves this time around are much bigger, they're much longer, but we're dealing with an economy that has far more stimulus and money supply and all kinds of things going on. So everything's bigger and better. So that doesn't really change my opinion. But yeah, I mean,
so
gold
you're
does,
looking for a similar correction that it was 45% back then.
Yeah, believe it or not, and people get really upset when I throw these numbers out here. I think 2000, 2170, somewhere in there is probably where we see. Now, how long it takes to get there, I don't know, but I think that's ultimately where we're going. And, obviously I get a lot of pushback because if you look at sentiment readings, 75-ish% of people are probably bullish gold. Most speculators are long. Nobody believes that there's any chance that gold can come down. And that I remember all of these same narratives and same sentiment readings occurring in 2011. So I'm convinced we're probably going quite a bit lower. When everybody thinks the exact same thing, I think someone's missing something.
Okay, and you have an interesting look on the S&Ps up here. I saw
I
that
do.
chart. Yeah.
Yeah, and I'll pull that up. One more thing before I go to S&P, I forgot to mention the RSI down here. You can see the RSI. This is again a monthly chart. RSI has never really survived being this overbought. It can persist for a little while, but it hasn't really survived. I mean, even in 2020, we saw $500-600 pullback.
Yeah.
And one last thing, if we do come all the way down to 21.7, we're only giving about a year and a half worth of gains back. And I know that's a lot, but markets do that all the time. It's not that unheard of.
Okay.
All right, so let's go to S&P. All right. This is again is a monthly chart, so it's the big picture. Right now we're flat the S&P. We were net short with options going into Friday's job report, and we got out on that sell-off on Friday. And now we're waiting. I'm hoping it comes back up and tests 6450, 6500 so we can get back in, but we'll have to just kind of see how it goes. I'm not a doomsayer, but I think when I look at this chart, I see a heck of a lot more risk to the downside than I see potential on the upside. So that's why we're kind of in sell rallies mode. But you have to be careful. These rallies obviously have been
Yeah.
they're sharp, they're relentless. They don't really give you much room for error. So you have to be very careful. But we're seeing some really on a big scale, we're seeing some really big red flags, RSI divergence, meaning stock markets keeps going higher. RSA is making lower highs on those. Doesn't mean something has to happen in the next day or two. It can take a year or many years for these things to unfold. But I think it's just a good reminder that stocks can go down. It doesn't feel like that because ultimately we've had several years of just amazing stock market performance. And I think people have kind of gotten lulled into the fact that there is no risk. But I'm old enough to remember the financial crisis. I mean, we really had a decade of just torture. So, and I think at some point we're going to have to probably go through some sort of cycle like that again.
So I'm thinking that maybe 5-6%, maybe to your first target, and
Yeah,
then another move. I'm thinking that the
sure.
bear comes next year,
Could be.
Carly, and that people will curse the letter V because those are the
Yeah,
kind of bottoms we've had, and
yeah,
they'll have to go up to L to
right.
see what market looks like when it's in an L.
Yeah,
So
I know.
yeah,
Some
so
of these younger people haven't experienced that, but eventually they will, I think. Yeah.
yeah. So some great looks, Carly. You're one of my favorite technicians. Real
Well, thank you.
clean, and nothing simple and powerful
Very
is
simple. I
what
keep it simple.
I like about. It appeals to me because I'm a simpleton. So
Well, you should be.
after 50 years of this, so um, best way for people to follow you and keep in touch with what you talked about today and upcoming opportunities.
All right. Well, you can sign up for a free trial of our newsletters at decarleytrading.com. It's DECARLEY trading.com. Also, I'm on social media. If you just search for Carly Garner on Twitter or X, my handle is at Carly Garner.
Yeah, and I like the way Carly approaches futures markets with options and taking in premium to pay for outright options because options have decay. In fact, most options are like relationships; 90% of them expire worthless. So she takes advantage of decay to smooth out the odds of just being net long a put or call. And you could learn these option strategies from Carly and be there for big moves and be wrong for a day or
Yeah,
a week.
it happens.
Yeah, and then she'll have a chance to be there
Right.
instead of just being stopped out and the money's gone. And then, you say, oh, that market burned me. Well, it wasn't the market, it was your strategy. So
Right.
check Carly out.
Thank you.
Yeah. So you have a great demeanor, and she's calm, and you could tell. She went from being up 5 to down 12, and didn't sweat it. Okay,
Nope.
so you don't want
Been there.
someone to work with that is a panicker. Okay, because then you'll get impulsive and compound your errors. So, Carly, I respect you, and I hope that people follow up on this and learn how to trade futures options with you.
Thanks, Dale. Appreciate it.
All right, Carly Garner, everyone, you can follow her on X at Carly Garner, and excellent. Jim Cramer uses her work. Every she's all over the place now. She's on every network. They want their viewers to see what Carly thinks. So that's a wrap, everyone. Don't just count your trend lines and your pivots. Count your blessings. Good luck today. I'm with Carly. I think that we may have peaked this week, a lower high, failing rally, and see what happens tomorrow. Day to time, we're always assessing and reassessing, and definitely risk management is everything. And thanks again, Carly. I'll talk to you in the fall.
Sounds good. Thank
And
you.
all right, and that's a wrap. You could join the team in 15 minutes on the morning edge. Adios, everyone. You're welcome, Saloon. Parth is thanking you. People are thanking you. They enjoy you. You got fans here, Carly. All right, that's a wrap.
Thanks again,
everyone.
everybody.
See you later.